Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at two 10 out of 10 stocks with unanimous strong buy ratings. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks that score a perfect 10 on the Tip Ranks Smart Score. That is a data-driven score that looks at 8 unique factors and measures a stock's likelihood to outperform the overall market. On top of this 10 out of 10 rating, they also come in with unanimous strong buys from Wall Street analysts with some pretty attractive upside potential. So today we're going to take a look at these two companies, what it is that they do, and of course what those Wall Street analysts are predicting for the stock's future. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into today's stocks. First up is a company called KAROOoo. They trade under the ticker KARO, currently priced just above $50 per share. The stock has gained 40% in the past year and in the last 3 months is up 23%. They currently score a 10 out of 10 on the Tip Ranks Smart Score with very positive crowd wisdom and positive technicals and fundamentals. KAROOoo is a Singapore-based company providing real-time data analytics solutions for smart transportation through their software-as-a-service products. Serving over 125,000 commercial customers and 2.4 million active subscribers across more than 20 countries, KAROOoo operates primarily through 3 segments: their CarTrack, Carzuka, and Karooooo Logistics. CarTrack is their core business, contributing about 91% of their revenue, and offers a cloud-based platform that provides real-time data analytics for connected vehicles and equipment. Their Carzuka is a marketplace for buying and selling vehicles, and Karooooo Logistics focuses on last-mile delivery management through a software application. KAROOoo will be sharing their next earnings report in the after hours today. This follows a report back in May where they had record revenue, operating income, and earnings per share for their 4th quarter and the full fiscal year. Q4 earnings per share came in at 54 cents, beating expectations by 15 cents per share. Their CarTrack generated revenue of 4.1 billion South African rands in subscription revenue, which was an increase of 15%, and their subscriber growth rate came in at 17% for the whole year. Management said 2025 was a year of strong execution, impactful innovation, and significant progress, and that they accelerated their customer acquisition, enhanced with their platform with more advanced AI video capabilities and other features, and successfully launched their CarTrack tag. Just last week, an analyst at Needham initiated coverage on the stock with a buy. They said the company's vertically integrated telematics solution is considered a superior strategy as it enhances customer satisfaction and helps in gaining market share. By managing the entire process from installation to customer service, they've achieved an impressive 95% retention rate among their commercial customers. They said with low total addressable market penetration in key emerging markets where they operate, there is significant potential for subscriber growth, positioning them for outperformance in the coming fiscal years. And with 5 current analyst ratings, the KAROOoo stock does come in as a unanimous strong buy, with an average price target of $55.75, implying an upside potential of 11% from current prices. Looking at those ratings down below, they range from an upside of 3.6% up to 19.5%. So we will see how the stock moves following that earnings report tonight. For our second stock, we're taking a look at the H World Group. They trade under the ticker HTHT, currently priced at $33.22. Overall, in the past year, they are up 6%, but in the last 3 months have fallen over 5%. They do currently score a 10 out of 10 on the Tip Ranks Smart Score, with increased hedge fund activity and very positive crowd wisdom. H World Group is a major hotel management company operating out of China. They have properties across a variety of segments, from economy to luxury hotels. Founded in 2005 and headquartered in Shanghai, H World has become one of the fastest growing hotel groups globally, with operations in 19 countries. They have over 11,600 hotels with 1.1 million rooms, and have a wide range of hotel brands from economy, mid-scale to luxury. Their latest earnings report came out near the end of May, where they did fall a bit short on earnings and revenue estimates. There were some tariff-related issues that brought uncertainties to the market outlook, and they did see their DH revenue decrease over 11% year-over-year, mainly due to the transformation of 10 leased hotels to franchised hotels. There were some highlights, however, including robust membership growth and expansion in their upper mid-scale segment. They also saw strong growth in their managed and franchised revenue, with 21% growth year-over-year. Following that quarterly report, we did hear from a 5-star analyst at Benchmark who reiterated their buy rating. They said that despite the first quarter results being slightly below expectations, the company showed confidence by reaffirming its full-year guidance. They've also demonstrated resilience in leisure travel demand, with management optimistic about growth in traveler numbers and spending during key holidays. These strategic initiatives, combined with stable new signings and efforts to enhance quality, are anticipated to drive a sustained margin expansion. With 4 current analyst ratings, H-World does come in as a unanimous strong buy. And the average price target of $45.75 implies an upside potential of 38%. Looking at those price targets down below, they're all in the double digits, ranging from 26% upside to over 44%. So that is a quick look at 2 unanimous strong buy stocks, both scoring a 10 out of 10 on the TipRank Smart Score. Let me know your thoughts on these companies in the comments down below. I always love hearing from you guys. And of course, please don't forget that these videos are never a suggestion to buy or sell any stock. So make sure you're always doing your own research and due diligence and stick to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.